right? You saw a lot of people get spooked by really strong jobs data. Now, actually, this weekend, I spent about half of it just arguing with people in my YouTube comment section. I need to do a little bit less of that, but it was actually good argument. It was, actually kind of like good conversation arguments. And it wasn't like real fighting. It was more, we were discussing, why did the stock market go down on bad jobs data? Was anybody else confused by that? Was anybody confused, like, why the heck are stocks dropping on good jobs data? Now the NASDAQ is actually, we stopped out of this trade. NASDAQ is continuing to push lower here under support and maybe testing this new area, right? We might be going into another stab at fresh lows for the NASDAQ here. Was anybody else confused by the S&P 500's move lower? By the way, hello to everybody. Good afternoon. Hello. I see a lot of people saying hi. Hope you're doing well. Sorry, I jumped right into the action today. I'm just, there's a lot of market theory we got to discuss because this is a little bit more advanced. If you're brand new to fundamentals, the jobs data on Friday might have really confused you. Let's try and make light of it because it's a really important thing that we understand this. Why is it that jobs data on Friday beat expectations by a long shot, and in response, strong jobs, the stock market sold off? Well, here's why. We're trying to land a ship here, or like let's think we're flying in an airplane, and if I draw an airplane, it's going to be a terribly drawn airplane. Actually, hey, we're starting out right. Let's see if we, like, you've got the airplane jet kind of like little thing here, and then there's this, right? The wing. I don't know, it's kind of a good jet, right? Could be worse. Anyways, here's our airplane, right? We're trying to land this thing. And what I mean by this is our inflation situation. This is the inflation plane, okay? Now, the inflation plane, we're trying to land it. You don't want inflation to go up. We're trying to land the plane, right? Our goal is to land, right? So if we're trying to land, actually, you know what? I'm going to give myself a better canvas for this. So if we're trying to land the plane, right? We don't want to go up, right? That's no good. We don't want inflation to go up. We want inflation to do what? The ideal is a soft landing, right? Where you do this. By the way, oh, this is a great analogy. Holy crap, Nick, you're on another level with this one. 2% is our target inflation rate. Right now, we're up, let's say, close to 3%. Okay? That's no good. We don't want 2%. We don't want 3% inflation. We want 2% inflation. So to get inflation down, the Fed has to navigate this plane. The Fed is the pilot, by the way. Fed is the pilot of this plane, okay? So we want data like jobs data, PMIs data. We want it to stay strong enough that the plane stays intact, but we don't need it to be so hot that we're just taking off again, right? That's the issue. We don't want this because then inflation goes up too. Our altitude is inflation. Oh my gosh, this is the perfect analogy. That's why they call it that's why people call it the soft landing, right? The soft landing is we get inflation to come down and we don't crash the plane, right? So if you restrict the economy too much and we cause a crash landing, the plane blows up. We don't want that, right? We don't want the plane to go up. We don't want the plane to crash. We want it to land softly. So to do that, economy has to hold up okay, but inflation also has to come down. Now, jobs data on Friday suggested which one? Scenario 1, 2, or 3? It was number 3. It suggests that the economy is ramping faster and that this could mean altitude goes up, aka inflation rises. We don't want that, right? We want inflation to cool off, but we also don't want the jobs market to crash either. So you want somewhere in between, Goldilocks, aka you want not too hot, not too cold. That is another way of saying it. You hear the two expressions that I hear most frequently are Goldilocks economic data and soft landing. Same kind of concept. We want data that's not too hot, not too cold. So people were confused on Friday because on Friday you had very strong jobs data and yet the stock market sold off. It's because the stock market is saying, oh boy, we're going higher, inflation is a problem, and we can see that reflected in the US 10-year Treasury yield. It's floating higher once more and ultimately spooking the stock market.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
Anyways, I took an S&P long trade and it's flopping right now. So this is a trade that's not working out for me. I liked this level of support, and that level of support did not like me back. So it took out those lows here. I'll stop out if need be today, take a loss on the S&P. But I got out of the way of the NASDAQ, which it doesn't sound like much, but it's a slightly less loss than it would have been had I stayed in the NASDAQ trade. So I liked the price action better on S&P. You can see here's NAS. NAS not holding structure here. So I think it's headed to test this area here. 20,400 is another level for the NAS that I'm watching. And we take a look at the S&P. Meanwhile, I liked that the NAS or that the S&P was wicking very well off of this area. And we closed down on this level on Friday. But at the time that I took the trade, we wicked off this, then closed lower. So a little bit of rejection. And that's my signal to go ahead and potentially stop out of this trade if necessary going forward. So yeah, I mean, risk assets taking a little bit of some heat here. Same thing with gold. This is kind of an appropriate reaction in my view to gold prices coming down a little bit. I mean, the dollar is just so strong. Yields are so high or rising, right? This is putting pressure on metals straight up. Gold is down 2.4. I'm sorry, silver is down 2.4% today. Gold 0.75% and continuing to range in this market. You know, you need this week, you want to talk about what gold needs to see this week? You need to see a fresh breakout here. That is what we need to see for gold to actually make a stab at higher prices. From a price action standpoint, you want to know what we need to see in terms of economic data. You need inflation to cool off, right? Inflation is freaking out right now. That's what's it's the U.S. economic data. It's just coming in so strong. It's freaking out everybody, and people are buying the dollar as kind of that safe haven, that way to hedge their bets a little bit. So we want to keep a close eye on inflation this week. We've got the producer price index and the consumer price index coming out later today. So, if we take a look at inflation, right? CPI. Here's our CPI chart. By the way, in the Edge Finder, we added the producer price index, which we can take a look at that now. Here's the producer price index. It's been coming in 3 times in a row. For those who are Edge Finder users, if you see something like this chart, Frank and Giles did a great job building this. Those are 2 of our developers behind the scenes. They color coded this for us, which is so cool. So we have our forecasted numbers for inflation in the yellow dot. So for the last 3 reported producer price index numbers, look what we've got, guys. You've got producer price index forecasted, and then what comes out is higher than expected. And what they programmed this to do is it color codes to the color blue if it's higher than expected, and it color codes to red if it is lower than expected. Guys, we have not seen a miss in inflation, a lower than expected inflation report since September. What we want to see, if you're somebody who wants gold to rise, stocks to rise, dollar to fall, if that's you, what you want to see this week is a red missed forecast on this chart, right? So we want to watch this really close because, again, if we get another blue reading, you're going to have some market participants get a little spooked out there, right? If you have another beat in forecasts of inflation on the producer price index, on the consumer price index, it's gonna scare people, right? Because people are gonna say, look, inflation is bottoming out. We have had in the past 3 CPIs, 2 out of 3 of them have been higher than forecasted numbers. Actually, I'm sorry. They both, on the CPI, they've met expectations, but they've risen 2 consecutive times. So we bottomed out 2.4. The forecast was 2.3. We got 2.4. So we had an upbeat inflation report. Then we had a higher report, then a higher report. So the market, let's see what the market's forecasting, by the way. I'm curious on CPI, what we've got here this week. So PPI, let's look at CPI. CPI year over year, we're forecasting 2.9. So 2.9 is a move up to this level. So that's where we're forecasting. So if that number comes in at 2.9 or 3 or 3.1, the market's not going to like that, because the market's going to say, look, inflation it bottomed in September of 2024. If that is the story, then yields go higher, dollar goes higher, gold goes lower, stocks go lower, and Bitcoin goes lower, right? All the risk assets would not like that. What would be good news for the market would be actually if we got a 2.7, if we flattened out on inflation and just said, okay, well, we're not rising, but we're not falling either. That would be a good start for inflation. Now, if you had a big surprise to the downside, then the market would cheer, because they'd say, look, inflation's actually getting under control. But we've got issues, right? We've got some problems to work off in this market right now. You've got, for example, oil prices, right? Oil prices continue to rise. Take a look at the daily chart for oil prices. We've got resistance being tested here, jumped up over the weekend. If oil prices take out these highs, right? Why is this an issue? Well, rising oil prices cause more inflation. So if oil prices start to really substantially break out, we've got to watch that as another indicator. The dollar, if you're a currency person, the dollar continues to look really strong on the Edge Finder. So I'm not looking to fade the dollar at all. I'm looking to be with that trend. I've predominantly been on the long side of the dollar for several months now, looking for like euro dollar shorts, pound dollar shorts, Australian dollar shorts, Kiwi dollar shorts, and then bullish setups on dollar CAD, dollar Swiss. And if I take any of those trades, like I said, you'll get notified in our Discord server if you're a VIP member. Analysis for Bitcoin. Yeah, let's look at Bitcoin, see how Bitcoin is doing. Again, dollar pushing through those highs is mostly bad for Bitcoin. So if we take a look at Bitcoin here on the daily chart, I actually like the kind of area that we're entering into. But what I'm not so in love with is the idea that we came down to this 38.2% retracement, this level of support, which was pretty key for buyers. And we're starting to break through that level. So I'm curious to see how we close today. I still like the upside for Bitcoin. I am not, bearish on this at all. I think that we've consolidated and we're testing some lows here, but it's really going to be curious to see how we react. Are we going to bounce off this level, or are we going to take out those lows and continue lower? I don't really know. I prefer the long side here. I think that we have more upside, but it's a risky trade as always. Bitcoin is very, very volatile and can move really quickly. I mean, it could be, up by 2% by the end of the day, or it could be down 9% by the end of the day. It is very, very volatile. And the average daily range for Bitcoin, last time I checked, was like a $4,000 price move per day. So if we were to take 4,000 from here, that means it could go back and completely undo what we've done, or it could take out those lows and be trading down by the 50% retracement by the end of the day. So be really careful out there with Bitcoin. It is a very volatile, volatile chart out there. So I'm going to watch it close and see if I can find some opportunity on that chart.
So dollar index. Hey, what do you know? We're going higher. As we thought, as we said, I said, don't fight the dollar. Now that we've cleared this big like 109.50 to 110 pocket, this dollar is probably still in a nice little trend. We're probably heading down towards parity on euro dollar. Okay, we're at fresh lows today at 102. I mean, I hate trading this thing already only 200 pips off of parity, but I think I kind of have to. I don't have to. I don't have to do anything. But probability of hitting parity at this point is fairly high, I think. Let me check something. Are we oversold? Are we divergent? Let me find out. Let me pull up another workspace here that I have. Let's go harmonics and pivots. So this is another workspace that I use. Let's go to euro dollar. Okay, so euro dollar on a daily time frame is starting to show, ooh, not a bad trade there for the old yearly pivot, 106.30. Oversold conditions. We had a little spike there on the euro dollar. We have a big fat pocket all the way down here. Some really nice demand levels from just above parity, 1.008 down to like 97. So I could see the euro dollar still pressured to the downside, falling in this zone. This is where I'm looking for the buyers to step back in. Okay. So what am I noticing here? Well, on the daily chart, we have some lower lows in price. We are seeing some disagreement in momentum. We have some lower lows in price. We have some hidden bullish divergence on relative strength. Doesn't mean I want to call the bottom. Okay, doesn't mean I want to call the bottom. Doesn't mean I want to call the top on DXY. But man, it's getting closer. It's getting way, way, way closer. Weekly chart. Weekly chart. Now this is interesting on the weekly chart. We've been heading down on the weekly chart, and we are still heading down with momentum, and we are still heading down with relative strength. The weekly chart might be a little bit more in control with where this thing settles in. So if I'm using an indicator on the weekly chart, I would say that if the weekly chart hits oversold conditions, okay, maybe looking, I didn't mean to do that last one, oversold conditions, maybe looking for that to line up. It still doesn't mean there's a bottom, right? Like we could have oversold conditions. This market might like spike down and then put in a bottom, but just be on the lookout for it. I still like the idea. So I'm probably not going to sell euro dollar right now. Okay. Although I would love to, but I should have been selling it at 105 to go lower. I should have been selling it at 105 targeting parity. And now I'd be deciding, okay, I'm up 300 pips on my position. Do I start protecting profit? That's a much better conversation than should I sell it at 102 to chase the extra 200 pips to parity? I mean, it's okay, but I'd rather wait and see if this thing hits parity and lower. I'd rather start scooping up some some buy orders. I'd rather start scooping up some, demand levels and then see if this thing can come back and find some really good structure at that 105 to 106 handle. That to me is a much better trade. And that's a kind of a topping point in the dollar index. And so I think that's a much better timing trade versus trying to just chase right now. Okay. Meanwhile, dollar CAD, did we hit my profit target? It's right there. It's right there. Let's go. Dollar Swiss. Okay. This one's 9 pips away from my profit target. Hit it today. Hit it this week. I'm ready for dollar Swiss to be done. It's got to be close. Let me set a chart alarm at 92. Dollar Swiss, all positions close for profit. So when that chart alarm goes off, hopefully it goes off this week. Good stuff. All right, what else? Oil. Let's go back to the daily chart. Okay, I'm going to get rid of, let's go back to this workspace here. Oil. Another spike to the upside. This is on geopolitical stuff, OPEC controlling supply and demand, Russia sanctions, oil prices are heading higher. This is certainly with last Friday's candle. That's a more convincing move that the bulls are in control for the time being. Okay, does this make CPI data a little bit stickier? Yep. Right. So, how nasty, how high does oil get? I don't know. If you're long oil, you're happy that you're long. That's it. Like, I don't have a trade on oil. I'm not long. I didn't trade CL futures. I did all my trades back here. All my trades on oil were bull call spreads for profit. That's all I did. I'm not in oil right now. I'm just watching to see if oil goes higher, how ugly does inflation get in the U.S.? PPI tomorrow, Wednesday CPI. Look at the calendar for the week. They're all forecasted to be higher. Okay, so let's go to Tuesday's news. Tuesday, 8:30 should be PPI for the U.S. Here's your forecast. PPI year over year. Look at this big jump. Previous print year over year was 3%. This is showing a forecast of 3.4. Are you freaking kidding me, man? Like, that is higher purchasing, what's PPI? Producer Price Index. So you got the PMI numbers, the Purchasing Managers Index, PPI is Producer Price Index. If that is higher, again, just another tip in the cap of higher inflation. Look at CPI, or the core PPI year over year. 3.4 is the previous print, forecast at 3.7. Both measures looking higher. So not a good look. Okay, we'll see what that prints this week. Going to Wednesday, 8:30 a.m. You have CPI data. We're looking at core year over year. Previous was 3.3. Forecasted is still 3.3. CPI previous was 2.7. Forecast is 2.9. Again, still looking at a higher move. Not a good look for inflation. Let's go to a third-party inflation measure. We were at 2.93 last week. Now it's up to 3.04. Again, looking like it's going up. Are we going to break these highs? I don't know. We're going to find out. What's the 10-year doing? What's the 10-year yield doing? 10-year yield today is up. Okay. I have seen forecasts with this thing going up as high as about 5.5%. That's not good. I said above 5%, something breaks. We have a look. To me, if we're greater than 5%, this is risk off. If we are greater than 5%, something will break. So we could have bond market. We could have major risk off event. That is a big wall of worry, in my opinion. Okay. So how aggressive does the market react to it? I don't know. We're about to find out, because it doesn't seem like this is slowing down right now. So just something to be aware of. All right, what else? Oil, gold, silver. Gold. Actually, let's check natural gas. Spike up to fresh highs in natural gas. A lot of volatility. I'm long UNG with basically a longer term diagonal spread. So I bought the $5 call, selling the 23. My break even's around 16.25. So this is an income trade to April. If we get up into the 20s here, I get this called away for like $600 or $700 per contract. We'll see. I'm looking to see like if this inflation stuff and energy price is going. The U.S. right now is one of the biggest suppliers of natural gas to Europe, more so than Russia. So I don't know. I mean, it could be just a supply and demand trade, and also, natural gas for really, I mean, all of like 2023 to now, it's just been making lower prices. Look, on the daily time frame, this is the first time in a long time that we are now above a 200 moving average. That is a long time, right? Like this thing started into a bear market after topping out in August 2022. We've been in a bear market basically since October 2022. So that is a 2+ year bear market natural gas. And it was just a matter of time where are we going to see price finally start to make a, higher low and higher high. And it's just now happening. So if this is a reversal that's underway, you can see here, there's a lot of potential upside for natural gas. I wouldn't be like crazy bullish on this unless something is breaking in the supply chain, but even for a, 1, 2, 3, 4, 5 wave move coming back into this structure here, somewhere in the 20s. So, I mean, if I turn this trade into, I think I'm in like 6 to 10 contracts long. And so if I turn, let's say, what would be that break even? I've got $18. So $18 max profit here, paid $11.25. So that gives me $6.75. So I'll just use a simple number like 10 contracts. So that's $67.50 in profit. $67.50 in profit on about 10 accounts. I mean, that's a good chunk of profit. I don't need price to do anything wild and crazy. I just need price to go up a little bit. So we'll see if it doesn't. But it's a trade that I've given myself plenty of time. I went out to 2027, but then I'm selling against it something aggressively because the premiums were pretty decent. So we'll see if that's a play. Gold. It looks like gold is red on the day. Red on the day. I'd still like to see, especially if the dollar, this is interesting that gold has stayed bid and dollar's getting stronger. Is this a bit of a fake out trade in gold? Maybe. This could be like little noise. This could be, breaking higher to test the highs again. I'd still love to see gold give me a pull back into here. If this is like range bound gold, I'm good with that. If this is a high, low, lower high to lower low in gold, I'm good with that. But it seems like right now gold is maintaining a pretty good bid price. We did form a higher low right here. Watch that structure. Watch that structure for right now. Okay, if it breaks above the highs, I'm not necessarily adding to new highs on gold. What I might end up doing is taking some GC futures trades to see if we get to higher highs. Otherwise, I think gold is just good to have in the portfolio and stay long. You know, Bitcoin down 2% today, gold's down 1% today. Market's gapped lower. We're actually doing a pretty good job of filling today's gap. It's close. So anyway, keep an eye on gold. I still like silver. Silver's down, but I'm looking at major support around $26. Bitcoin, little spike down to 89.2. You know, kind of getting bid up right away, but I'm going to keep an eye on this one. I have a measure move, high, low, lower, low, measure move to 87. Potentially a little, you know, added volatility down to about 80K. And I'll add more Bitcoin / probably IBIT, most likely. I do have some trades running a micro strategy. We're at 320. I'm going to get it called away, I think the first week of February at 305. And I might maybe this week take a look at this and do another roll. If it pays another, you know, $2, $3, $4, I might just do another roll for another week. Let me see if that, I'll look at it right now. So I'll look at MicroStrategy really quickly. MicroStrategy, I have the shares. There's my 305 by 245. And let's see. If I roll this out another week. Oh no, I'll close this. Okay, so if I roll this again. So the 305 by 245, if I roll it out, nah, I'm not gonna do anything. That's another $2. It's okay, but I'm just gonna try to let this one get called away. It's like $2 grand in profit. I'll let it get called away. All right, coin. See what happens there. Ethereum staying above. It's actually back below $60, so I'm happy that I closed out. Good. I closed out at. I needed price to stay above 60 by literally this Friday. So I had a 117 expiration. It was a 60 by 40 bull put spread. And I collected on that trade like $7.50. I closed this thing out for a 50-cent debit last week. So I still grabbed $7 of profit per contract, and I need a price to stay above 60. Well, right now it's at $59.99. If price goes lower, then I'm running into chewing into my profit and also taking out potential assignment, which I didn't want to do for this. So I'm happy I took the profit. All right, what else? Copper. Copper's up. Interesting. Copper's up, but China's not doing anything. Not to what I saw. Japanese yen still choppy on the Nikkei. Japanese yen. Let me see 6J really quickly. Where's my Japanese yen futures? Starting to show a little bit of strength there. It's not quite at the attractive level I'm willing to throw some trades in it. Let's go DAX. Look for some dynamic support in the German index. FTSE. I don't know if we're going to make all-time highs, but probably range-bound. I mean, I think you can see some pretty clear horizontal levels here. So, you know, if it comes down to the lows, tight stop loss. If it comes up to the highs, maybe fade it. If you can trade some options on this one, maybe some iron condors or strangles. Argentina. Hopefully we have it. I'd love to see a topping pattern. I don't want to sell it. I'm just saying, like, pull back here. Little pullback here, find some support, then I'll get long for resumption Argentina long. I'll just dollar cost average into this ETF. China, Brazil, Apple, Mag 7, big gap lower on Apple. Holy shnikes. All right, let me check and see something here. Apple. This week, anything attractive to the upside? Nope. It's all lower right now. Looks like the market's kind of dumping some Mag 7 right now. You know, Amazon heading lower. Wow, Apple's getting dumped hard. Why is Apple so bad? Fresh EU scrutiny over App Store fees. Man, leave it to the EU. So big gaps to the downside on Apple. I would just still look at this one. I put in this trade last week for the Powell alerts, 210 by 205. You know, would I take some shares of Apple? Yep. Would I take shares and own them at, what, $198? Yes. So if I owned Apple at $198, I get a 25% discount, 24.5%. I'm totally good with that. Until then, I'll just try to generate some income. Amazon, own some shares, have it collared. Google, just some trades out to March and May right now for income. Meta, looking to see if we have a little bit more of a pullback into this 200 moving average. Microsoft positioning for a lot of income down here in the 370 to 375 zone. Netflix, I'd love a bit more of a pullback on Netflix to start establishing some longs, whether it's income trades like a 111 or a either a 111 or ratio spread, or I just start to throw in like, hey, look, it's at a decent discount. I'm going to throw in $1,000 in Netflix. You know, we're throwing a couple $1,000 in Netflix. If we fill this gap right here, there's two big gaps I'd be watching on Netflix. One is this area, and the other one would be, you know, we clearly look like we're in a bear trend, but we'd come all the way back down to this gap here. So if I had area 1 to buy, area 2 to buy, I mean, Netflix has still all the potential in the world to still be a $1,000 stock. Okay. Bistrat, if you're asking about futures and options, one good place to start is if you purchase the Pulver Alerts bundle. I know I have a full course called Practical Options that's included with that purchase. So that's a good place to start. That's 13 of my favorite option strategies. Or you just keep tuning in and you'll just keep hearing me talk. That helps too. NVIDIA, 132. I've got it collared at 140 and 130. This one, let me double check. I get a ratio spread on NVIDIA. I've got a collar trade on NVIDIA. Right now, my 100 shares, there's my 130, 140. That's my collar trade. The bearish trade, and this is out to March. And so my look on NVIDIA is this. We have a pretty nice gap to the downside today. If this, you know, fills the gap and it gets called away greater than 140, that's totally fine. I'll make some money on the trade. I think my break even on NVIDIA, let me double check here. NVIDIA break even, 132.14. So if it gets called away, I'll make $7.86 a share, which isn't too shabby. If it goes lower, then I will be looking at using my put to lower the cost basis and then turn to flip this hopefully for, I'd probably, if we get a decent flush lower, then I'm probably going to try to take NVIDIA and flip it for like $10+ a share. Right now, $7.86, not too bad. But if we get another flush lower and I can lower my cost basis, I'll try to flip this for 10, you know, maybe $10, $15.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.